Welcome everybody who has joined us live and everybody who will be watching this on replay. Welcome to our webinar on time to get organized for the annual compliance requirements in China. My name is Christina Kohler-Coluccia. I'm the head of business advisory at Woodburn Accountants and Advisors, and I'm excited to take you through the critical aspects of compliance for foreign invested companies and representative offices in China. I hope that this session will provide valuable insights into the processes as well as the requirements that are vital for maintaining compliance in China, and obviously then avoiding any forms of penalties that may arise. Before we start today's session, I always like to give a brief intro to Woodburn Accountants and Advisors. Our focus is to help foreign investors as well as local companies with their business setup and corporate administration needs. Our focus is to help these businesses to set up their companies with a solid and sound foundation, leading on to then offering outsourcing solutions for all of their accounting and tax and payroll needs, as well as any other form of administrative services like corporate governance, trademark registrations, etc. Our objective is really to make sure that in the first 5 years of establishing one subsidiary in either Hong Kong and/or China, that you have an extremely solid foundation to be able to meet your objectives and goals and ultimately your growth in the Chinese and Hong Kong market. A little bit about myself. I have been doing this for the last 22 years. My focus has always been on corporate services within the Chinese territory. I have thus far helped over 850 companies with their market entry strategies, their implementations, and then ultimately controlling their growth and the direction that they want to lead into in both markets. So as mentioned, today's presentation is really focused on the compliance requirements that Chinese companies have to start thinking about for fiscal year 2024. So today we're going to cover all of the annual compliance procedures that must be followed, which typically begins after the end of the fiscal year and continues until late June. However, we do recommend starting the process now. We will be discussing the potential repercussions of non-compliance, especially in the context of the evolving social credit system, where adherence to legal and regulatory standards is under increased scrutiny. So what is the importance of compliance? Compliance is obviously not just a bureaucratic formality. It's crucial for the sustainability of your business in China. Legal compliance helps you avoid penalties and any additional costs while maintaining a good standing within the social credit system. Non-compliance can result in severe consequences like the downgrading of your credit rating or even the revocation of your business license. Moreover, compliance significantly affects your ability to repatriate profits, which a lot of people do not think about, especially at the startup phase of their business, which we all know is key to the financial health of your organization and for a lot of foreign invested companies for their mental health, knowing that they can remove their profits from China. So let's go through the annual compliance procedures for foreign invested companies. These activities in our recommendation typically begin 1 to 2 months before the fiscal year ends. So again, we're already mid-December. I am doing this webinar a little bit late because in theory, we always use the period straight after the October national holidays to remind our clients to start thinking about the annual compliance procedures and how they want to operate. Typically in the startup phase, companies will always be open to using not globally renowned auditing firms. They would be happy to go with local certified public accounting firms to do their audits. Whereas if they then grow, or if they're looking to be acquired, they would then think of going with bigger brand name auditing firms. And it's important to start thinking about that in this period of November to December, because a lot of these bigger companies, as well as even the local CPA firms, will want to start doing a pre-audit, especially if you've had extensive transactions throughout the year, to then be prepared for the full audit come January, February of next year. Now, it's important to remember that really the annual compliance procedures start straight after the Western New Year. If the Chinese New Year falls in January, then usually it will also start straight after the Chinese New Year. So that would be, and this year it's going to be early February, where we then kick off all of the procedures, booking appointments with the auditors, and then understanding that all the compliance procedures would not be finished until June. So let's go through the steps one by one, okay? And I've really detailed them in a step-by-step format so that it's easier to understand, but many of the things could also be done, simultaneously, kind of. Now, step one in the process is, as I mentioned, the preliminary audit planning. And again, this is something that we would recommend to talk about in November or December to give the team, your team, and the auditing team the necessary time it takes to make corrections, to make adjustments before the main audit actually takes place. What does the preliminary audit planning mean? It means that you have identified an auditing firm that you want to work with. You ask them to come in to do a preliminary audit. And again, generally speaking, this will be for companies that have higher levels of transactions running through the company. If you are still in your startup phase, this stage really would not be necessary. It's really when you've got a handful of people on your payroll, you've got a handful of transactions that are running through the company every single month, and you are noticing through your accountant or your outsourced accounting firm that there might be adjustments that have to be made. In an ideal scenario, these adjustments would have been made month to month as the year progressed. But if you've not been checking your P&Ls, then really your accountant right now should be telling you, please take a look. Are there adjustments or corrections that have to be made? Now, this proactive approach can save you a lot of trouble down the road. You have to realize that the fiscal year for every single company in China is January to December, which means that finding an auditor, booking the schedule for the audit to take place, for the main audit to take place on a certain date, especially if you've got stringent regulations with your head office about when those dates should be dealt with. Today, I'm only talking about deadlines for China regulations, but there are also potentially internal deadlines as well. You need to be proactive in all of this. And a lot of people leave things last minute. They come back from the Western New Year. They start saying, okay, let's look at year-end management reports. Oh, dear Lord, there are thousands of adjustments that have to be made. Yes, I'm being dramatic at this point, but it is a lot of work for your team to redo things and then for the auditor to take a look. So I'm again all about organization and proactiveness. Use this time now to look at the data and understand where corrections have to be made. In an ideal scenario, this would not be a necessity if adjustments would have been made throughout the year. Okay, so if you've been organized like that, having done it month to month or quarter to quarter, then you should be, well on the way to having a very smooth auditing period. Now, step two is annual audit report preparation, okay? So once the fiscal year concludes on December 31st, It's time to prepare the annual audit report. Now, I just missed one point that I do want to highlight in the preliminary audit planning, which I should have added as a bullet point. It is inventory checks. So if you are stocking inventory in China, you should also preempt that your auditor does an inventory check around the 29th, 30th, 31st of December. Remember, these are not public holidays in China. To do your final inventory stock check so that from an inventory perspective, the numbers are clear cut. And having your auditor do these checks means it's their responsibility to make sure that the numbers are also correct. So I also want to highlight that in the preliminary audit planning. So to go back to the annual audit report preparation, once the fiscal year concludes on December 31st, it's time to prepare the annual audit report. And this report is crucial in reflecting the financial activities that occurred in the fiscal year. So in this case, fiscal year 2024. These audit reports must be completed by the end of April to ensure timely tax filings to be made in May. Now, while you may be surprised to learn that a year-end financial audit is not legally mandated in China, the completion of an annual inspection form is essential. This form will require you to indicate whether you have conducted an audit and provide the CPA firm's details. Failing to provide this information could lead to fines and being placed on the blacklist, which would severely impact your business. So although legally in China, you're not mandated to do an annual audit, you cannot complete step 4, which is the annual inspection reporting without having an audit on hand, okay? In addition to that, when you do your enterprise income tax reconciliation, which is the annual profits tax filing in May, if your tax officer requires you to submit your audit, you are required to then submit it immediately. Okay, there is no chance for you to say, oh, we haven't done it. That will lead to penalties and fines as well. Okay, so it's a vicious cycle, guys. I'm not saying it's ideal, but it is something very important to make sure that you get your annual audits done. I also want to highlight here that for many clients that are in their startup phase, you will probably not be thinking about dividend repatriation at all, right? However, there might get to be a point where you are profitable and you want to start repatriating dividends back to the shareholder. When you do a dividend repatriation, it is absolutely a requirement to submit your audit. Okay, so if you don't abide by my rules or you don't listen to what I say, I just want you to understand that you cannot repatriate dividends abroad without a proper audit having been done, indicating what your net income has been in that fiscal year. In any year that you have been profitable, you will have to submit an audit. So I'll give you an example. If you have not repatriated dividends, but you've been profitable for 5 years, and now suddenly in the 6th year, you want to repatriate dividends for the last 5 years, you will need to submit the audit reports for each of those individual 5 years. So from an organizational standpoint, just get your audits done as part of the administrative process. The auditing fees, if you do decide to go with a small CPA firm in China that has the proper licenses and is not blacklisted with the tax bureaus, you know, they're not going to be charging you an arm and a leg to do it. On average, for any startup company, it will be around 5,000 or 6,000 renminbi to then have a Chinese version and English version readily available to you. So it's a small investment to just be prepared and organized and have no repercussions coming from any of the government offices. Step 3 is the enterprise income tax reconciliation, or in other words, the annual profits tax filing, okay? Now, I've put here that the deadline is May 31st. However, although the deadline is May 31st, you may very well be getting phone calls from your tax officers to submit it earlier. Could very well be that your tax officer says, please submit by April 30th. So generally speaking, we always say to make sure that you have your audits and all of the management reports settled and confirmed no later than by mid-April. Okay, just to make sure to be preempted that you don't miss your deadline. Now, you are not at all pushed to submit anything by May 31st. If you want to submit it by April 15th, you are very open to do that. You just have to wait that your tax system, your online tax system, is open for you to make the submission. But there is no problems to do any of this earlier, okay? Now, why do we call it the enterprise income tax reconciliation? Predominantly because this step involves aligning any discrepancies between your actual taxable income and what you have recorded. It's essential to ensure that all the additional tax liabilities are accounted for, as well as any potential reimbursement claims. Accurate reconciliation is key to avoiding any tax issues with your tax bureau. In addition to this, just a minor point, something that you probably won't be thinking about right now, but if you ever decide to exit the Chinese market and liquidate your company, your tax reconciliations will be fundamental in the liquidation process. You want those to be as accurate as possible so that the liquidation process with the tax bureau goes extremely smoothly and doesn't cause any issues or repercussions to be highlighted or come out. Step 4 is what we call the many-in-one annual reporting. Now, in 2020, there was a significant development which was introduced, which was the many-in-one annual reporting system. Ultimately, I don't use this terminology. I've always used the word annual inspection. Generally speaking, this annual inspection is one annual report that is then, it's a single submission that goes to about 7 different government bureaus via the National Credit Information Publicity System, okay? It is a compliance report, if you will, whereby you need to give certain details about your operation in China. So, for example, one section is HR, and you need to state how many people were on your headcount as of December 31st, what were the roles of these individuals, how many people did you terminate in 2024, etc. So it's kind of like this, inspection, if you will, of how your business did in 2024. These are then statistics that are utilized by these multiple departments to produce statistical data for fiscal year 2024. Okay, now the deadline for this is June 30th. There's absolutely no change with that. You are absolutely welcome to submit it sooner. You can actually submit it at the same time as your annual profits tax filing, as long as the National Credit Information Publicity System is open for you to make that submission. Now, for startups, this slide will be of no consequence to you, but for those of you that have significant related party transactions, transfer pricing is something that will come on your radar. So step 5 is involving the appropriate transfer pricing documentation for the local filing. If you have done, as I said, significant related party transactions, you will need to prepare documentation per the defined thresholds for ownership or for transactions. So to give you a brief idea of what this means, ownership transfers of tangible assets above 200 million RMB, financial assets over 100 million RMB, or interrelated party transactions over 40 million RMB must all be documented carefully to meet these compliance regulations. If you hit one of these triggers, you will be required to prepare transfer pricing documentation. Okay, so again, just something to put on your radar. the one where really for my type of clients, the small, medium-sized clients, it comes into play is if you've got this intercompany, even sister-related party transactions of over 40 million RMB in the fiscal year 2024, you have to prepare this transfer pricing documentation. Now let's look at annual compliance requirements for representative offices. I do not have very many clients that have representative offices in China, but I think it's still important to highlight what the requirements would be. Representative offices are not exempt from compliance requirements. They must still prepare an annual audit report, conduct an annual tax reconciliation, and submit necessary documentation to the State Administration for Market Regulation. That's the SAMR. These submissions have to be done between March to June each year. These steps are vital for ensuring clear oversight and obviously maintaining regulatory compliance. For representative offices, the first step is to prepare the annual audit, very similar to limited liability companies. This report must detail the financial operations of the office, including employee registrations and expense verifications. If you don't know, representative offices are purely liaison offices that are cost centers, so they will only have expense reports. It serves as a key document that reflects the office's compliance with local regulations, and obviously needs to be submitted to the appropriate authorities within the timeline. Step 2 involves the annual tax reconciliation, again, very similar to limited liability companies. This process has been made easier through online platforms that streamline these submissions and then minimize, obviously, the administrative burdens. The third step is the annual reporting to the State Administration of Market Regulation. This is only one government office for representative offices, whereas for limited liabilities, it's one submission to 7 different government offices. And very similar to limited liability companies, it is basically a report on the legal status and business activities that are running through the company within that fiscal year 2024. You will also have to show proof of the activities that the foreign headquarters has done in terms of transactional volume, because the liaison office, the rep office, is there to liaise with the headquarters. And obviously then there's the expectation that there are certain transactions that are running through the headquarters, and all of this does need to be reported. Now, the key thing is to understand what are the consequences of non-compliance, i.e. what are the consequences of not doing these annual compliance procedures? Now, I mean, it's never positive, right? You have to stay updated on regulatory changes. Compliance requirements can also change frequently. It's important to understand what different regions within China may require from you. So although I'm giving you a very generalized overview of what these annual compliance procedures are, it is critical to talk to your tax officer to understand what their deadlines are and what their requirements are. It is really important to understand that if you don't do this, then your social credit rating could be removed or reduced, which means that, and the social credit rating is something that all companies, especially if you bid on products, will check to see whether your company is actually in good standing or not. If you are in a specific industry that might be prohibited or restricted, you could be put on the blacklist or expelled from the regulatory lists. If you submit any information that is dishonest, which hopefully you would not, because the auditor will be checking all of that, then again, you could be categorized within the State Administration of Market Regulation that you are a company that is in bad standing. All of this is then going to be seen by individuals that can easily log on to the website of the State Administration of Market Regulation. If they just have your Chinese company name and your address, then they can go into the system and look, because this is all public information. Okay, so it is a type of background check that companies do use on you, and they will see this. When I have done background checks on companies previously, honestly, the worst that I've ever seen is a company that delayed these submissions. They should have applied for extensions. If they would have applied for extensions, there would have been no remark within the State Administration of Market Regulation that they had filed with delay, and as a consequence, they had a monetary penalty. The monetary penalty is really not exorbitant, but it is still money that comes then out of your budget, right? And if you are tight on cash flow, it's really not something that you want to experience. In addition to that, that record of delay remains within the system of the State Administration of Market Regulation. So people who then go in, review your company, they will see that you have delayed these filings. Now, generally speaking, your tax officer that's been appointed to you will remind you frequently to do your submissions on time. If you need an extension because you're too late with getting your audits done, apply for that extension immediately when that opportunity comes that they call you to do your filings. For the annual reporting, the annual inspection, it's really you who has to remember that the deadline is June 30th. So it's important to make sure that's in your diary and you just do that submission in advance. So tips for managing compliance requirements. Obviously, staying updated on regulatory changes is crucial because compliance requirements can change. I highlighted that earlier. There can also be differences between different cities and regions on the on what needs to be submitted as documents. The flow, however, will be identical. So step 1, step 2, step 3, step 4 will all be the same. Okay. If you are unsure about the team you've appointed, it's no problem. You can also engage an outsourced provider to do this work. We have a lot of clients who have in-house finance teams, but outsource the annual compliance procedures because their in-house teams are just swamped with the day-to-day operations of the company. And this is all very standardized processes. We can help to organize the audits. Obviously, the finance team needs to be there to answer questions from the auditors about the day-to-day transactions that are running through the company. They might even have to submit documents for their working papers and things like that. But all the remaining steps in terms of annual profits tax filing, annual inspection reporting could be done by an outsourced provider. It ultimately relieves the burden for the in-house team from doing this work. It's a compliance procedure. It's not probably on the highest priority list for many people. So just keep all of this in mind and make sure the dates are up there. One item that I have not placed in here, which has nothing to do with the company, which is why I've not placed it in this webinar, but I will highlight it verbally, is that by March 31st, individuals in China, all individuals in China, have to do an annual individual income tax filing. This is now all online. You cannot outsource this work. You have to go into your tax system, which everybody will have access to. It's usually set up through a username as a mobile number. You have to submit your ID card. So that's also why no outsourced provider can help with this function. It is a good reminder to tell your employees to make sure that by March 31st, they've done this annual income tax filing. Basically, this annual income tax filing is required for people where you submit things like you own a property and you're earning rent, to put all of this data inside. If you've been earning dividends or you have shares in companies, you have to report all of this in the annual individual income tax filing, which again is why it's a real personal thing. There's no obligation from the company side. I just think, it's really good from a company to just send out a memo to say, hey guys, please do remember March 31st is your deadline to submit these forms. Now, last slide, how Whitburn can assist you. Obviously, we can take care of the entire compliance process for you, ensuring that all the regulatory requirements are met efficiently. We can help with preliminary and annual audits in terms of finding auditors for you. and going through the process of assisting. We can also help with inventory checks if required. But again, I would highly recommend using the auditor themselves to do it. We offer guidance on the enterprise income tax reconciliation or the annual profits tax filings and all those related compliance processes. We can also help with the annual inspection, which needs to be submitted. If there are variances between cities and whatnot, we can assist as well in finding out that information. But again, if you are using local providers, it's really their job to be giving you this information. So don't pay extra to go to somebody else for it. Use internally the team that you do have. And last but not least, again, if you've got any doubts, obviously language is always a key issue. We can verify things in English. If you're not understanding or can't do the intercultural translation between Chinese and English, we can help with that as well. So just to conclude today, being organized, being proactive in meeting the compliance requirements is essential in this period right now that we are in. You have to align your processes with the steps that I've highlighted in this webinar. Stay updated. Consider leveraging expert advice if needed. Remember, when you do the pre-audit planning, this is the time when adjustments have to be made or you have to rebook transactions, etc. Think about all of these things. The goal ultimately is that you want to be safeguarding your business in the long run, right? So I'm hoping I've given you all the advantages of why this is such an important and critical step. It really does involve dividend repatriation steps. If you're looking to get acquired, the audit reports are going to be a necessity. And although compliance can be extremely daunting, because again, everybody is daunted by administrative steps, it is really crucial to get this in order and just get prepared starting November of every year that this is going to be from November to June, something that has to happen. And I've just put a little bit quote here, a small little quote on this side that remember, operating in China can be a rewarding journey as long as you have the right preparation and the right strategies in place. So I have garnered questions through the registrations that have come in. So I will go through those if you do want to stay on. But I will open the floor for those of you that are watching live to ask any questions. You can go into the chat box and add them inside. But I will then just start now with some of the questions that came in through the registrations for people who could not attend live, but do have these questions in place. The first question, can you elaborate a little bit more on the consequences a business might face if it fails to comply with the annual requirements? What specific penalties are typically imposed? So there will be a financial penalty if you are delayed. That financial penalty is a not pro rata, how do I say? It's a man-day fixed rate. And for every day that you are delayed, this rate is applicable. Usually the rate is on average, maybe 50 to 100 RMB, really depends on the tax office. Really also depends on what, pardon my language, on what type of a pain in the ass your tax officer is. But it will be first a financial penalty. If you are delayed, it's also going to be recorded in the State Administration of Market Regulation that you were delayed with whichever step in the compliance procedure you are in. So ultimately, it's the annual profits tax filing or the annual inspection, which is something that for me is worse than the financial penalty. I would not want to have a bad remark put in there, and because that does then affect your social credit standing. And that's something now that, you know, you don't really want to mess around with. So those are really the repercussions. If you don't do it at all, the repercussion is that you're put on a blacklist. Could be that your bank accounts are frozen, and that you are then not able to operate ultimately. But I mean, that's really worst case scenario, right? And if you're not doing these functions, I think it just shows to everybody that you're anyway looking to exit the market. The second question, how often do the compliance regulations change in China, and what resources can companies use to stay updated? So I believe the question is really about the annual compliance regulations in China. The main resource is have open communication and dialogue with your tax officer. Your tax officer will give you all the details that are necessary about when the submissions should be made. They will also be calling you and reminding you of when these submissions should be made. Who would they be calling? They would be calling the appointed finance manager that has been indicated when you registered your company in China. It's the person that is then filed within your tax system. So that's the person they would be calling. What specific documentation is required for the preliminary audit planning phase? So first you have to identify in the preliminary audit planning, what period do you want to do a quick review on? Is it January to October? Is it January to November? It's basically then preparing all of your financial management reports, first of all. So that would be your P&L, your balance sheet, your financial, I mean, the whole array of financial reporting that you need to prepare, including accounts receivables, accounts payables, all of these lists. You might even have to prepare your trial balance. And this is then provided to the auditor to do a review. They will then send back a whole series of questions that you need to answer. With this preliminary audit planning, this is the period where needs to be kind of a quick back and forth discussion that you know whether adjustments have to be made within the company. But first, I'll align what period you want this review to be in. As part of the preliminary audit planning, you should also be looking very carefully at inventory lists, making sure they're up to date, and making sure that, or asking yourself whether you need to do a stock check or not. Question 4, is there any flexibility in the deadlines for annual compliance submissions, or are they strictly enforced? It depends, right? If you are proactive and you ask for an extension, then you are fine. That means nothing would go into the State Administration of Market Regulation, okay? Or if you've got a really fussy tax officer, they might put it in even if you've asked for extension, but then there's no financial penalty. If you ask for extensions, you're not really in trouble, okay? If you don't ask for extensions and you miss these deadlines, you are in trouble. And like I said, for the annual inspection, which is due by June 30th, that is one deadline. The annual profits tax filing, I've put May 31st in this presentation, but there are some tax officers that require it by April 30th, which again means that it's a shorter time frame, which means you have to get organized. And that's why I say, have this open dialogue with your tax officer to understand, is the deadline April or is it actually May? And yes, it is strictly enforced. We have clients who don't give us certain information to complete the steps. If you don't give us the information, we can't file. And it's not like you can file some data and not others. You have to do the full submission. And then you have the tax officer calling daily, especially by the last week. When are you going to submit? When are you going to submit? Next question. These are all very good questions. Next question. What are the best practices for ensuring accurate annual profit tax reconciliation? Annual profits tax is declared on a quarterly basis. So by this point, even if you're doing the preliminary audit planning, you would have done your annual profits tax filing for Q1, for Q2, for Q3. So you would have already had those declarations on hand. It's really then understanding what's going to be your annual profits tax filing for Q4, having these documents in place, understanding what are you going to achieve in Q4. Some people might then say, you know what, I'm going to increase my expenses for Q4 so that I got a very low tax so that my overall tax is minimal. Be careful with these things. The auditor does check this, right? If you have suspicious activity like that, it will be a red flag for the auditors. There are no real best practices except looking at your Q1, Q2, Q3, preparing for Q4, and understanding whether you've paid too little or too much throughout the year. Can you explain what is meant by the many-in-one annual reporting and how it simplifies compliance for businesses? Annual inspection is really a tedious bureaucratic step. It is for the government, as I mentioned earlier, to create statistical data. Be very careful to not lie here. You need to make sure that all the data that you put into this annual report is consistent with what is in your audit report and what is then also filed with the annual profits tax filing. They will sync this up. It's simplified purely by the fact, so in previous years before 2020, you had to do 7 applications. Like you had to fill out 7 different forms that were submitted then to each individual government bureau. Now, basically, because it's all online, you fill out 1 form, all the same questions. It's 1 submission that then gets brought into the 7 government bureaus. It is a much lengthier form, all right? For companies new to the Chinese market, what initial steps should they take to ensure they are compliant from the start? So now, if you had your company established in the second half of 2024, my suggestion would be to check with your tax officer whether it's necessary for 2024 to do an audit. If you've been profitable in this very short time frame, good on you. You will need to do an audit. If you are at a loss, the question is, do you need to do an audit? And do you need to actually then do the annual profits tax filing when you are actually at a loss? This is, again, comes down to the dialogue you should have with your tax officer, okay? I can't answer that question for you. It is very much individualized. Even for those of you that have just got their business license in November, just got their business license in December, again, rule of thumb is you won't need to do an annual audit for this year. However, really, really important to double check that with your tax officers and their requirements, okay? And also make sure that you check it with the State Administration of Market Regulation as well. Otherwise, what can you do for these initial steps? It's exactly as how I have outlined it here, except because you're new, because potentially you don't have that many transactions, potentially you have nobody yet on your payroll, the audit is going to be very fast, very smooth. It also means there's less work to do for the annual profits tax filing and the annual inspection. But just get into this mindset of these are the administrative processes you're going to have to do every year. It's a routine. Generally, these steps have not changed in 20 years. What has improved over 20 years is that the system has gone online versus having actual individual papers in front of you to fill out. And like I said, for the annual inspection, it's a 1 submission. The annual profits tax filing is through your current tax system anyhow. So it's all moved online. The key, I always find that the difficulty is the time spent on finding your auditor, getting quotes, signing up with the auditor, and booking a date. And with Christmas, Western New Year, Chinese New Year, all relatively close together, that organization can be quite difficult for companies to realize. You're coming back from New Year and, my team bombards the clients saying, okay, we need the financial management reports really to be completed by January 15th. That way they are done and dusted. Chinese New Year starts this coming year, January 28th. As soon as we're back from Chinese New Year, we start getting the schedules in and start working with the auditors to get the audits done. So really, straight after Chinese New Year is when all the audits are starting to get prepared for all the clients. And that can take, an audit can take, if you have, if you're a startup brand new, it will take maybe half a working day. If you've got more transactions, a full working day. If you've got big amount of transactions, could take up to 3 to 5 working days to just do the working papers around the audit. Then the auditor goes back home and has to produce the report, which can take, again, up to 2 weeks. So that step is all the internal coordination that you have to think about. It's not that you can appoint an auditor April 1st and make the assumption that by April 30th, you're going to have the audit report readily available. I doubt it, especially in this peak season when everybody has to get their audits done. So that is probably the trickiest part, which is why, again, we tell people to start November, December of the previous year to kind of figure out who their auditor is going to be and get them prepped and whatnot. So that's it. Those are all the questions that came up in the registration form. Again, I really want to thank everybody for joining. I hope this is going to be helpful for you also when you watch this recording. Later on, we're going to be putting it up on our YouTube channel, and it will also be part of the Woodburn Academy on our website. So you can always re-watch this if you want to verify it, or even forward it to colleagues if you wish them to take a look at it. And just say, you know, can you verify that you're doing everything correctly for the company? The goal is you want to be able to sleep at night and you're not hitting any, missing any deadlines, right? So I want to thank you all for joining. No other questions came in. I wish you all a pleasant day. Take care and see you soon.